Hey there, welcome to another episode of the Block Crunch podcast, where we share condensed insights from builders, investors, and entrepreneurs in the crypto space. I'm your host, Jason Choi, and you can follow me on Twitter at Mr. Jason Choi. Now, crypto projects face a new set of challenges that more conventional types of startups do not face. For instance, how to manage the cryptocurrencies and crypto tokens that you've raised during your ICO, and how to weather against the volatility, how to recruit for open source projects, how to create defensive moats in an environment where basically anyone can come in and fork off your code and create their own copy of your token, as well as how to design tokens that are compliant with regulation and also make business sense. So I'm incredibly excited to invite Jill Carlson on the show today to discuss what are some ways that we can think about and navigate these new sets of challenges. So if you are an entrepreneur in the space, or you're interested in breaking into the crypto space, or you're an investor trying to figure out how these projects are operating, then this would be an essential episode for you. So without further ado, let's buckle up and dive right in.
This is worldwide phenomenon.
And today we have a very special guest, Jill Carlson, an independent consultant for projects such as 0x, which we've actually had on the show before, as well as Zcash, Tezos, and more. She has also spoken at IMF, UPenn, Go Quakers, MIT, and most recently ZCon, alongside industry pioneers like Vitalik Buterin and Jameson Lopp. And that panel is absolutely amazing, so definitely check it out. And she has also been quoted by the New York Times, Wired, and CoinDesk. So I'm very excited to have you here, Jill, and welcome to the show.
Thanks so much, Jason. It's great to be here.
So can you start by introducing your background and maybe in what capacity you work with all of these amazing projects in the crypto space?
Yeah, so as you outlined, I have had the incredible privilege of working with some amazing projects in the space. I've been working independently for the last year or so as a consultant and advisor to these projects. And really my work, the best way to summarize it is probably just very generally strategy, because it's covered all manner of things, mostly on kind of the business or ecosystem side of these projects. Everything from thinking about fundraising, how to structure a fundraise, how to go about distribution of a token, how to make sure that you are appealing to a user base, all the way through kind of go-to-market strategy, driving adoption, product market fit.
Got it. And how did you get involved with these amazing projects? Because especially as a new space, there really isn't a defined career path, and I don't assume there's any kind of formal application process for this, right?
No, indeed. Really, I've just gotten a handful of lucky breaks. I would say that the first lucky break was working with Chain. So I joined Chain a few years ago, working in business development. Chain started its life as a Bitcoin API developer platform, and evolved into kind of a blockchain for Wall Street enterprise play. So I was doing a lot of work there with bigger institutions, educating them around what blockchain is, how it might be able to solve some of their business needs, which was an incredible crash course on the technology and, on also really thinking critically about where it's applicable, where it's not applicable, what its limitations are. Huge credit to everyone who I worked with there, who were the ones who really got me up to speed and kind of boot camped me through all of that. About a year ago, last summer, I left Chain in order to pursue an opportunity that came my way. This was with Tezos. I had known the Brightmans for some period of time, about 9 months or a year at that point, gotten to know the project pretty intimately, and still am very convinced of the technology and what they're building. And they had approached me about coming and doing a bit of work on kind of the ecosystem development operations side of things, after they had fundraised last summer. So I said to them, this is an incredible opportunity. However, I am not that excited about moving to Switzerland. Lovely place, but I quite like living in San Francisco. So, let's find a way to structure this and do this in a way that works for both of us. And what we came upon was this contractor consultant relationship, which was an amazing opportunity again to work with them in that project, and has somehow become replicable for me over the course of a number of other projects and companies that I've worked with since then.
That's amazing because I really view you as a pioneer in kind of contracting in crypto. And you've written a lot about this as well, especially in some recent articles about free companies. So we'll definitely dive into that. But for now, just to kind of structure the coming discussion a little bit, I want to take today to talk about, challenges facing a crypto project throughout its entire life cycle. And you've written extensively about different topics. So I'll be drawing from all of the articles that you've written, as well as some of the interviews that you've done in the past. So let's start with an important part of many projects, which is capital management. And what's interesting to me is that a lot of people focus on the ICO of a project and forget that the actual development often ramps up after the ICO is done, after the capital is raised.
Yeah.
And I remember you writing in an article that over $6 billion have flown into new protocol projects last year alone in 2017. But surprisingly, there's not much talked about how projects are managing all this capital. So my question to you is generally, what are some pitfalls and best practices that you see some projects making with regards to managing this new influx of capital?
Yeah, so I think that the first big hurdle for projects in capital management is actually even just in recognizing that this is a problem that they'll have to deal with. And, what you've seen develop over the course of the last year or so is this new model of both fundraising, but then also, treasury or capital management, where it's not a normal startup model. Because in normal startup model, of course, you raise your seed round, and then you raise a Series A, and there's this kind of iterative process where you can be managing burn rate and have a good understanding of what your costs are, and continue to raise at a rate that makes sense for the growth of the company. This is a bit different from that, of course, because in an ICO, it's a bit more of a one-shot deal where you are raising probably all of the capital at once that will then span the life of the project or the company. Of course, there are nuances to this where now you have people doing pre-sales and SAFT rounds and pre-sales, but ultimately all of these things are probably leading up to some kind of an ICO where that is, again, kind of the one-shot deal where you're going to have a massive amount of capital, probably relative to the size and maturity of the project coming in. And you're going to have to find a way to manage that. This is also different, of course, from large corporations who are seasoned in terms of thinking about how they are managing their treasuries and, have, years of experience in terms of understanding what their costs are going to look like and understanding what their risk profile should look like in terms of that treasury management. Because again, as I said, this is just a completely new model. So the first hurdle, as I said, is to actually just recognize that we're in uncharted territory here, that, probably it doesn't make sense if you've raised $250 million to hold all of that in ETH or in Bitcoin, or indeed even to hold it all in US dollars. It makes sense to have a diversified approach. It makes sense to take a step back, look at your business model or the model of the project, ask yourself, is this going to be something that's revenue generating? Is this something that is going to be run as just a nonprofit foundation and will need to live off of the returns of the portfolio of its treasury? Or is it something different altogether? I give a lot of credit to Meltem, who I know you've had on the show, who has really been a pioneer, I think, in terms of thinking through this problem of capital and treasury management for these ICO projects. She's definitely informed a lot of my thinking about it.
And that's interesting because it almost sounds like as if even after raising capital, a lot of these projects have to treat their treasury or their capital reserve as a type of investment. They have to figure out how to mitigate the risk inherent in the assets that they hold. And which ties to an article that you wrote that is a favorite of mine. You've written about how token projects are often short convexity. So can you maybe explain to listeners about what this idea is and perhaps what are some proposed solutions that you have in mind?
So yeah, absolutely. As with all parallels or metaphors, the parallel I'm making about convexity is not perfect, but I think that it gets at something important. So the notion of convexity in sort of old school Wall Street finance refers to a dynamic that you get in bond pricing and in certain other assets, where basically the more that your position moves in your favor, the less exposed to that position you become. That's the notion of being short convexity. If you're long convexity or positive convexity, the more that your position moves in your favor, the more exposed to that position you become. So just as a quick example here, if I own a certain amount of some asset, then I have exposure to that asset. I want that asset's price to go up. If I'm long convexity there, the more that asset price increases, the more exposed I am to that asset. I'm actually making more and more and more as the price goes up. If I'm short convexity, I'm making less and less and less as the price goes up. So, it's still moving in my favor, but it's diminishing returns. And it struck me that this is something that applies to the way that many projects are approaching their treasuries and their approach to capital management, because projects, in this space, they raise one big lump sum of money. And the idea is that they'll be then sitting on some amount of their own tokens. And those tokens will appreciate over time as they, the team, continue to add value to the network and to the technology and to the community as a whole. Fine. So the tokens are appreciating, you're going along, spending some of your cash on engineers and, developer experience people and, community outreach. So you're burning some cash, but the value of the tokens is rising. But eventually you're going to hit a point where you're going to have to liquidate some of those tokens in order to continue, growing the project, growing its influence, and also getting those tokens to appreciate. So suddenly you're spending, even as the price of the token is moving in your favor. And that's a very problematic dynamic to have as time goes on, especially over the long term, because eventually you're going to reach a point where you're spending more than they're appreciating, in all likelihood, and then at that point you're going to have to start looking for other forms of fundraising capital again. You're going to have to figure out if there's a revenue model, or if you need to restructure the thing as like an evergreen fund where you're only spending what the return is, which may put a cap on whatever hyper growth you were hoping to achieve. So all kinds of questions around this that unfortunately there are no good answers for as of yet, just experiments.
In terms of, I guess, just very kind of high level proposed solutions, I remember reading that projects, instead of raising through Ethereum and Bitcoin, might want to experiment raising with stablecoin so that they remove the volatility element from that. But I also know that you've had some reservations about stablecoins in the past. So maybe can you talk a bit about whether it's viable for projects to maybe raise ICOs or raise fundings through stablecoins?
So I think if you're going to raise through a mechanism where you're solving for stability and a lack of volatility, I would recommend just raise in US dollars or good old dirty fiat money. I think that today is really the only viable answer to that. I do have reservations about stablecoins, certainly. My greatest reservation about stablecoins is, well, we have all these experiments out there of how to create a viable stablecoin. One of which is to have it be backed by some asset. So Tether is a good example of this, or TrueUSD is another. There's ideas about having sort of baked in monetary policy like basis. I think that's going to be an interesting experiment. I think that there are sort of circularity problems with the way that they've set it up, but we'll see. Would love to be proven wrong. But the main problem I have, and this applies to Tether specifically, it's not that I think that Tether has no value. It's not that I'm completely convinced that the Tether company is, fraudulent and that there's actually no money backing it or that they don't have the funds. My problem with it is that, as I see it, Tether doesn't accurately price in the risk that there aren't funds backing it. And what I mean by this is, even if you look at like a short-term bank note that is backed by, all of the reserves that your local bank has in their deposits, that banknote is still going to trade at a discount versus if it was just actual US dollars. It should never actually trade 1-to-1 with the reserves backing it, because you're still dependent on the credit and the good faith of that bank. And so this is the problem that I have with Tether, is that it doesn't accurately price that in. To make a very long story short and a very long rant about stablecoins short, I would say, I think that these things are all still in the experiment phase. I think that portfolio management, capital management in cryptocurrency is in the experiment phase. I think that stablecoins are big, interesting experiments. And I would advise against compounding experiments with experiments. Stick to one risk vector at a time.
Yeah, I think that's a great point as well. And beyond capital management, of course, recruiting is also something that's really important to all of the crypto projects out there. And you've written about how recruiting is a major, major problem facing a lot of these protocol projects, and also suggested this radical idea of a free company. So can you maybe explain, first of all, why you think it's hard to recruit specifically for protocol projects compared to, say, traditional startups, and how a free company idea can solve this?
Yeah, absolutely. So I think, as any of us who've dove down the proverbial crypto rabbit hole can attest, is that there are a lot of idiosyncrasies to cryptocurrency projects. There are a lot of things about them that make them just fundamentally different from working in other industries or even in emerging technology, but at sort of a more run-of-the-mill regular startup. There are different goals in mind. The technology is it's more multidisciplinary, I would say, than most other spaces, which differentiates it. And often the goals are also very different. We're talking about building decentralized networks. We're not talking about building sort of the next Facebook. And what that means is that there aren't that many people with a whole lot of experience yet in this area of what it means to be building and developing a cryptocurrency network. Over time, this problem will be solved. And I've spoken to plenty of people who've said, oh, this is not really a real problem, because look back at the early days of the web. People didn't know what they were doing there either. That was a whole new paradigm as well. And, the talent gap has just gotten filled over time. I think that that's true. But I do also notice that there are a fair number of people in the cryptocurrency ecosystem who act as free agents, who work as independent contractors or consultants. And there are many of the people who have been something of an inspiration to me or mentors to me as I've gone about this journey. But it is something that stood out to me, that people, have this desire to work this way, to stay independent, to be able to contribute to maybe a couple of different things or maybe all manner of different projects. And yet, that's not what projects, of course, are really going out and looking for. They're looking for full-time employees, which makes sense for many, many of the roles. But there is this kind of gap in terms of projects trying to hire, and then also, many of the people who have been around and do have experience in the cryptocurrency space choosing instead to act independently. So that's been my observation anyway. Certainly doesn't apply to everyone. I'm certainly biased based on my own experience, but.
Is that your general description of what a free company is, essentially allowing someone the freedom to kind of float between different projects?
So yeah, this idea came to me back in January, actually. It's been sort of stewing in the back of my mind for a while. And credit to Suna over at Token Daily, who hit me up and asked me if I had anything that, I'd been sort of mulling on, and pushed me to actually put pen to paper on all of this and open source the idea, if you will. But this idea came to me back in January, and it was during a time of, it was kind of the peak of the hype cycle, I would say. But I, at that time, had a number of friends who work in the space who had reached out to me saying, hey, so what is it that you actually do? And is it good? Do you like it? Is it a good setup? Because I'm thinking of branching off on my own and contracting independently with a number of different projects, either because they were, excited by a lot of different things out there, or because they were, seriously looking at, leaving whatever project they'd been at for the last number of years. So it was a combination of that. And then I also, in quick succession, read 2 books. One is called The Cathedral and the Bazaar, and it's about open source software and specifically Linux. And the other is called The Tower and the Square. So kind of funny, they both sort of have parallel titles: The Cathedral and the Bazaar, and the Square and the Tower, excuse me. And that one is by Niall Ferguson, and it's about kind of networks and hierarchies and how we've sort of traded back and forth throughout history between sort of networked versions of power structures and hierarchical versions of it. And something that he talked about in there was, at the very beginning of the book, sort of the medieval period, where, there was this great transition from sort of the empires of old to very networked kind of power structures, in which, you suddenly had this breakdown from the emperor into these very small fiefdoms and kingdoms. And these kingdoms had this very specific problem that resonated with me and what I was starting to observe of the cryptocurrency ecosystem. And that problem specifically was that these fiefdoms often were very rich in terms of financial resources, but didn't have talent to spend it on, basically. They didn't have, seasoned military veterans who could fight for them and defend the gates, and even go loot and pillage, other kingdoms, neighboring kings, in order to bring home more resources and conquer more territory and whatever it was. And so instead, these kingdoms would contract what were called free companies. You see where the term freelancer comes from, sort of Lancelot, Lansing. So they would contract free companies, which were these tribes, these bands or associations of seasoned knights and military veterans who could come and defend the gates and do work for these kingdoms, just sort of ad hoc. They were mercenaries. And it struck me that, while I would never characterize myself as a mercenary, and I think that, there are ways in which this metaphor breaks down, but I do think that, there is a parallel in the sense that if cryptocurrency is going the direction that and I think many others think it is yet another example of what Niall Ferguson would say is kind of a breakdown from the tower into the square, from a hierarchical power structure of, corporations and even, what were tech startups, the sort of Facebooks and Googles of the world, into a more networked power structure that has less hierarchy. And, if I were to then take the metaphor one step forward, what are the sort of new fiefdoms or kingdoms? Well, it's all of these protocol projects that, of course, are flush for the most part with cash, but don't have talent at the ready to be able to spend it on. And so this idea of a free company was to say, well, okay, what if we could band together, some of the freelancers and those who want to be freelancers in the space, those who want to contribute very broadly, and find a new structure of work. What does decentralized work look like? And so it's really more just me asking that question at this point, and really more of just a request for feedback and comment, which has been very interesting to hear some of that over the last week or so.
Yeah, for sure. So, and just to kind of follow up on that point, do you think this model only applies to, I guess, people on the business development side? Because my intuition is that for developers, for instance, if you want to build on Ethereum, you need to know Solidity. If you want to build on other platforms, you need to know the in and outs of other platforms. So it seems like the stickiness for those people, for developers, might be higher than just business contractors. So do you think the idea of free company could also apply to developers? Do you see developers just freely flowing and contributing to different projects, or is this mostly just, limited to more people on the business side?
So yes and no. I think that I think you're right. I think that in terms of the actual software development, I think that it would not be ideal to have your devs sort of jumping around from this project to that project, not least of all because of what you outline as the problem of you need to have sort of more specialized expertise in some cases, although I think that there are some areas in which we'll start to see more interoperability, if you will, between these various protocols and languages. Most projects, I think, are at least thinking about Solidity, transpilers, and things like that at this point. But I think that it should be something that can span across anyone who is sort of a general service provider. So I think one area that it would be highly applicable is to the people who do a lot of work around mechanism design. Mechanism design is an extremely highly specialized area. There's only really a handful of people, even within the space, who have done really extensive work on it. A lot of the work is still done, of course, in academia. But a handful of names jump to mind immediately of someone like Rick Dudley or someone like Zaki Manion, or Joey Krug, people who are advising across a whole range and number of different projects on this very specific area of incentives, game theory, mechanism design, et cetera. And so I think that that's a really good example of something that is a more technical area. It's not sort of strictly software development, that this would be potentially applicable.
Got it. And that's what I think is so important and so interesting about open source projects, is the fact that people can freely flow between different projects and advise different projects and maybe contribute a little bit to different projects without having to be locked down to one silo. And I think that leads us well to our next kind of area of investigation as well. Now that we've talked about capital management and personnel management, I'd like to talk a little bit about how people make decisions within these protocol projects. So in other words, governance. So you've worked with projects that have experimented with different models of governance before, from on-chain governance to off-chain governance to what people call layer 2 to layer n governance. So can you explain briefly, what these ideas are and what are some trade-offs that you've observed between the different models?
Yeah, absolutely. So, I think very broadly, uh, you have this notion of on chain governance and off chain governance. Off chain governance being the form of governance that just takes place, basically at conferences or on Reddit forums or in Slack and Rocket channels on Twitter. Um, and, that is it. One is almost hesitant to call it governance because it's so kind of all over the place and ill organized and inefficient, that it doesn't feel like governance, I think, in the way that we think of it. But I think that Bitcoin is a really good example of this, actually, where you don't have any sort of very formalized governance. The most formal governance you have in Bitcoin is through BIPs or Bitcoin improvement proposals, where there is actually some process around it. But then from there, I mean, at least as far as I can tell, it's just really a lot of debate and mudslinging, name calling on these various forums. But it does actually, at the end of the day, work. Again, it's highly inefficient, but I think that is a trade-off that we make in order to have it be functional, and in order to it's sort of this thing where everyone is kind of equally unhappy with it, and therefore at least everyone is kind of on equal footing, and there isn't this notion of a hierarchical power structure at play. So that's off-chain governance. I would argue that all cryptocurrency projects have some degree of off-chain governance going on. Then there's on-chain governance, where you have some mechanism or methodology of voting or vote counting or opinion expressing actually baked into the protocol. So, I think Arthur Brightman at Tezos was one of the first who really thought this through, going back to 2014. You go read the Tezos white paper. I think that's probably the best sort of overview you can get of on-chain governance, which is this notion that you as a stakeholder in the currency should be able to vote on upgrade changes and things like this. I would say that this is less really a sort of strict governance process and more just a coordination mechanism for how things will happen, because there again you will still have debates taking place on these various forums and in meet space and online, etc. So it's not a replacement for that, but it is perhaps a cleaner coordination mechanism. So those are kind of the two main breakdowns. I think Peter Van Valkenburg put it really well on that panel that you mentioned that took place at ZCon, where you can kind of break it down actually even into three, where layer 0 is sort of the human interaction piece of the governance. Layer 1 might be something like a Tezos, where you have this sort of token voting mechanism, and then you even have layer 2, where something like 0x, which is a protocol that's been built like on top of the Ethereum protocol, can govern itself on its own chain. So you do start to have these varying levels of it. My take on it overall, to steal from Nick Carter, I didn't initially realize I was stealing this from him, but I've said it before and I'll say it again, which is that I tend to think that Bitcoin's governance, at least for now, is the worst except for all of the others. So it's definitely imperfect, but I think that it's been proven to work. It's been battle tested, and really it comes down to forking as a form of governance itself.
And yeah, I'm definitely excited to see kind of these layer one and kind of layer two solutions start to develop as well. Because I think, like you said, a lot of this is still very experimental. And I think the only one that we as society is used to is still kind of off-chain governance, because that's pretty much how we've governed most companies, most things in life before. And when it comes to governing things on chain, that's definitely a new paradigm that we have to get used to. And I think that's a good segue to talking about the things that people are actually developing under these governance paradigms. So the actual crypto assets that people are designing. And I think you've written something that I think a lot of investors, a lot of, I guess, get rich quick investors would hate to admit. And it's that only tokens that can justify being independent assets will survive. So my question to you is, what do you see as some of the low-hanging fruit use cases that you think we'll see in the coming years for tokens, for blockchain-based tokens, beyond just, say, store of value and currencies?
So I actually still think that store of value and currencies are the killer app for now. I think that, I would love to see things that we've talked about in terms of sort of like the decentralized web and, all of these other kind of more out there notions of how the technology can be used. I would love to see those come to fruition. And I am bullish on a number of those use cases as well. But I think that first and foremost, we need to prove out that this technology is even useful as a product for store of value and for transfer of value and these sort of monetary use cases, because that's really what it comes down to. Is if you're creating something on a blockchain, it's going to be an asset. An asset has very specific characteristics and traits that makes it really only good for a few things. Those things are absolutely fundamental to our society. It is money. But I think that we have yet to even really prove out the product market fit and have a real go to market strategy around, even just things like Bitcoin and Zcash, who I'm doing some work with now, to demonstrate that, no, look, this is useful for something besides speculation, because speculation itself is not a use case.
And to close out the interview, I like to kind of talk about two things that you're interested in. So the first is decentralized exchanges. Of course, you've worked with projects like 0x before, which allows people to trade crypto assets without relying on a third-party kind of centralized exchange. And we've seen our fair share of centralized exchanges being hacked in the past. And I think a couple of them were hacked just in the past few months. But on top of minimizing third-party security risk, what do you see are some things that make these decentralized exchanges so important, and what about them fascinate you the most?
Yeah, great question. So, and I've gotten pushback on this a number of times, but I view decentralized exchanges as a critical step towards being able to use cryptocurrency as it's actually intended. And what I mean by that is, we love to view cryptocurrency as sound money, as a means by which we can actually control our finances digitally, without relying on third-party intermediaries, without relying on banks to custody our assets, without relying on third-party middlemen to broker trades for us, and so on. Now, none of that is any good if we're all storing our crypto assets on Coinbase or, through a trusted third party. Nothing against Coinbase. Coinbase serves a very important role in the ecosystem. But it misses the point if you're using it. And it misses the point of censorship resistant, disintermediated sound money. To quote a friend of mine, Tony Arcieri, who does a lot of work in the space, also a freelancer, I should note, who I think in turn was quoting the Who. It's this problem of then you're in the state of meet the new boss, same as the old boss, right? It's okay. maybe created this new system of cryptocurrency where, you don't have to rely on third-party intermediaries anymore, but everyone is still choosing to. And so, decentralized exchanges and, specifically, I would say the 0x protocol goes a really long way to freeing people from having to rely on something like Coinbase or Polo or Kraken or whatever it is to custody their funds and to trade and exchange their funds. And so that's what really excites me about that is it's using cryptocurrency as it's actually meant to be used.
Got it. And it's interesting that you bring that up because when you talked about censorship resistance, I think a lot of people, especially in the United States, for instance, don't fully appreciate the value of censorship resistance. And I know you're doing some work in Venezuela or helping some projects that are involved in Venezuela. So can you maybe talk a little bit about that as well as what you're working on in the future?
Yeah. So as a bit of background, I, like many people, left the Consensus Conference this year in May in New York, a little bit disillusioned with sort of the state of the industry. As Jason, as you and I were talking about just before we hit record on here, you kind of go through these peaks and troughs of thinking, oh, yeah, everything is great. Like what's going on in here is so cool, to being like, oh, this is all just full of shills and frauds and people running around in cartoon character costumes dressed up as coins, which was a lot of what was going on at Consensus. But I got talking to Zuko Wilcox while I was there, and specifically we got talking about this problem of basically product market fit in cryptocurrency, and just kind of thinking about like this has not even really been proven yet that this can offer real utility there. And he and I both got to thinking about, well, what's the use case that people always tout across the board, and it's the following. It's, well, yeah, Bitcoin in the United States or in the Western world, where we do kind of have some trust in the government and some trust in banking institutions and so on. It's not that meaningful for us. Maybe, it's a nice diversification. Maybe we are aligned with it ideologically. But for people in a place like Venezuela, where there is mass hyperinflation going on, where the monetary policies of the government over the last several years, even decade, have created a state of economic crisis that's led to a state of humanitarian crisis. It's a place like that where cryptocurrency really does have the potential to be fundamentally transformative. And so Zuko and I got talking about this when we, came across each other at Consensus. And, we kind of looked at each other and we said, well, okay, we know of some stuff that's going on there, some initiatives, but, what are we doing if we're not, thinking and working towards A, proving out this product market fit, but B, trying to use this technology that we're all so hard at work on building in a way that can actually have some meaningful impact and hopefully do some good to the world in this kind of humanitarian way. And so I've been working with him and with the Zcash company over the last few weeks, and will be into the future on exactly this project. And much of the project is going towards supporting initiatives, as I mentioned, that are already underway there. So, for example, RTM is a company that does a decent amount of work in Venezuela. There are several others. I've brought on board Alejandro Machado. You should look him up on Twitter. He has a great presence. He is Venezuelan. He has a great background in design, user experience, as well as computer science. And so, across us, we're working on some initiatives around education, around hopefully providing some infrastructure to people in Venezuela to allow them to access cryptocurrency as an alternative store of value and as a means of payment and means of getting paid, means of remittance, means of gaining income, all of these things. So very excited and feel very good to be working on that.
Yeah, and I'm really excited to see more coming out from just your writing and as well as your project with Zcash. And I think this is definitely one of the very high impact projects that most investors from the West especially are not paying attention to, but should.
Thanks, Jason. Yeah, I'm excited to be doing this work, and thanks for following along.
And that wraps up this week's episode of the BlockCrunch podcast. Once again, if you have learned something from that podcast and would like to learn more, definitely subscribe and give us a 5-star rating on whatever platform you're listening on, because it helps us get this out to as many people as possible. Once again, I've been your host, Jason Choi. You can follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi. And I look forward to sharing more with you next week.